Ever seen a boxer take a massive punch in the first round, stumble a bit, but then, almost out of nowhere, find their footing and start landing some solid jabs of their own? That's a bit like what happened in the Indian stock market today, June 2nd, 2025. It was a roller coaster, folks. We started with a thud, but did we stay down? Not entirely. So what really happened? Who were the surprise champions? Who took the hits? And most importantly, what does this mean for your money and your investment strategy? Stick around, because we're going to break it all down. No complicated jargon, just straight talk, and maybe even a surprising twist you won't see coming. This is your market story, simplified, market mood today. All right, let's set the scene. This morning, June 2nd, the opening bell wasn't exactly a cheerful sound. The Sensex took an initial tumble of over 600 points. That's a 0.74% drop, opening at 80,849.77. And the Nifty 50 wasn't far behind, falling nearly 170 points, or 0.68%, to start at 24,581.40. It definitely set a cautious mood, especially after a shaky previous week. Some early reports even whispered about the Sensex diving over 700 points and Nifty slipping below 24,600 at one stage. Scary stuff. But then, something interesting happened. A bit of a fight back. By the end of the day, the Sensex was down about 77.26 points, and the Nifty 50 closed around 34.10 points lower at 24,716.60. Not a win, but definitely off the day's lows. What's even more interesting, the Bank Nifty actually closed up by 0.28%. We'll get to why that's a big deal in a bit. And what moved the markets? The global drama and our domestic shield. So what caused this initial panic? Well, it was a mix of global headwinds and some homegrown worries. Picture this. On the world stage, we've got renewed US-China trade tensions flaring up. President Trump announced he's doubling tariffs on steel and aluminum imports to 50% starting June 4th. That news hit Asian markets hard, and India was no exception. Our poor metal stocks felt that punch directly. Think of it like a ripple effect, a decision made miles away directly impacting specific industries here. Add to that the ongoing geopolitical tensions between Russia and Ukraine, and you've got a recipe for market jitters. Back home, we had our own concerns. Foreign institutional investors, or FIIs, basically big foreign funds, were pulling money out. And everyone's on the edge of their seats waiting for the Reserve Bank of India's upcoming monetary policy announcement. But here's where our story takes a turn. Despite all this gloom and FIIs selling, the Indian market, especially our Bank Nifty and the small-cap stocks, showed some surprising muscle. It's like they said, "Not today!" This hints at an underlying domestic strength, possibly thanks to our own Indian investors stepping up and some solid economic numbers. NN. Behind the numbers, sector stars and stock stories. Let's zoom in. When the market gets choppy, you often see a clear divide. Some sectors swim, others sink. Today, the top performer was the Nifty PSU Bank Index, up a solid 1.95%. This was largely thanks to some really strong Q4 earnings from these public sector banks. The overall Bank Nifty also ended in the green. The FMCG sector, think everyday essentials, also did well. Godrej Consumer jumped 5%. Britannia gained 3%. This often happens when investors get nervous. They flock to these, quote, defensive stocks. And guess what? Small-cap stocks also bucked the trend, with the BSE Small-Cap Index gaining 0.17%. These little guys showed some real fight. On the flip side, metal stocks took a beating, down 1.4%. No surprises there given those US tariff announcements. The IT sector also slipped about 1.25%, with big names like Mphasis, HCL Tech, and Infosys feeling the pressure. This was likely due to those broader trade concerns. Now for some stock-specific action that caught our eye. Nykaa's parent company, FSN Commerce, reported a stunning 193% jump in net profit for Q4. That's huge. Yes, Bank shares climbed 6% after they announced a board meeting to consider raising more capital. AstraZeneca Pharma India, up over 12%. Shows that good company news can make a stock shine even on a gloomy day. But not all news was rosy. Vodafone Idea reported a Q4 net loss of over 7,100 crore rupees, though it was less than last year. And remember those IPOs? Leela Hotels and Aegis Vopak Terminals both listed at a discount today. A bit of a lukewarm welcome to the market for them, likely due to the weak overall sentiment. And futures and options for day traders, decoding the signals. All right, traders, let's talk signals. First up, the India VIX, our market's fear gauge. It jumped up today, closing over 6.6% higher at 17.1475. At one point, it was up over 7%. What does this mean? Basically, the market is expecting more bumps and swings in the near future. So option premiums might get a bit pricier, and you'll need to be nimbler with your strategies. Now, for the Nifty options chain for the June 26th expiry. The bulls seem to hit a wall around the 26,000 and 25,500 levels. That's where the maximum call open interest is, suggesting these are tough resistance points. On the downside, there's strong support seen at 24,000 and then 23,000, where the maximum put open interest lies. So these could act as a floor, and for the weekly expiry on June 5th, the max pain level for Nifty 50 is pegged at 24,800. This is the level where option sellers would feel the least pain, so the market often tends to hover around it near expiry. Keep these levels on your radar. What to expect next? The RBI showdown and key levels. So what's the crystal ball saying for the coming days? All eyes are laser-focused on the Reserve Bank of India's Monetary Policy Committee meeting, happening from June 4th to 6th. The big decision on interest rates comes out on June 6th. Given our strong GDP numbers, there's a real buzz about a potential rate cut. If that happens, it could be a major booster for the market, especially for banking and real estate stocks. But if the RBI plays it safe or sounds cautious, it could dampen the mood. So June 6th is D-Day. Also, keep an eye out for monthly auto sales figures, which will continue to trickle in, and some quarterly results from smaller companies. For you technical traders, some Nifty 50 levels to watch. Immediate support is around 24,691, with major support at 24,544. On the way up, immediate resistance is at 24,837, and a bigger hurdle at 25,984. For the Sensex, support is at 81,259 and 80,847. With resistance at 81,671 and 82,082. And that's our market story for you today. Hope you found it useful and a little less complicated. What are your thoughts on today's market? And what are you watching for the RBI policy? Drop your comments below. And hey, if you want more market storytelling that makes investing simple and maybe even a bit fun, make sure to hit that subscribe button and the notification bell so you don't miss our next update. Thanks for watching, and happy investing!